The Bitcoin market is flashing extremely bearish signals right now, and our general index analyzes key short-term and long-term indicators to provide you with a comprehensive summary of what is happening in the world of Bitcoin at the moment. Remember, this is not financial advice. The content is purely for educational purposes, and we encourage you to do your own further research. Welcome to Bitcoin Signal Processing. Here we observe and analyze key market indicators and aggregate them into one number, the general index. As of June 6th of the year 2026, that number sits at plus 0.07, barely positive. We call it the neutral zone with a bullish bias. But the real story is what's hiding underneath that calm headline. Let's break it open. The short-term signals look ugly. The 14-day RSI is extremely oversold, and our contrarian analysis, this suggests a short-term recovery could happen in a foreseeable future due to sellers' exhaustion. You can only sell what you hold, not what you have already sold. And many traders are aware of this, hence they view these levels as great buy zones, at least in the short run. Therefore, our models have assigned +1. ETF flows are also bearish, with over $2 billion in outflow over the past 10 trading days, and are assigned -0.6. Money is leaving the funds. And stablecoin supply is contracting across every time frame, extremely bearish, scoring -0.95. Think of stablecoins as the dry powder waiting on the sidelines. When that pile shrinks, there's less fuel ready to buy. On the daily, supply slipped about $600 million. On the weekly, it's down roughly $3.7 billion. And zooming out to the monthly, supply is drained about $6.2 billion. So whether you look at days, weeks, or months, the trend is the same. Money is quietly stepping back. If you only watch the daily tape, you'd be scared. But here's what most people miss. The signals that move this market the most are not the loud daily or even weekly ones, but the slow structural ones. And the four big long-term metrics are contrarian by design. The monthly RSI, the MVRV ratio, the power law model, and the 50 and 200-day moving averages don't follow the crowd. They lean against it. When the short-term tape is this fearful, these are the signals that quietly say the opposite and generally tell a deeper story based on multi-year data. Look at what they're saying right now. Monthly RSI is dead neutral. No euphoria, no exhaustion. The 50 and 200-day moving averages are holding their structure, with the 50-day moving average slowly climbing up while the 200-day moving average is falling. This generally hints to a potential flip from a bearish market cycle to a bullish one. This shift will confirm when the two cross, the famous golden cross. Currently, the 50-day moving average sits at around $75,300, while the 200-day moving average sits at approximately $80,400. At these zones, Bitcoin sits in what we call a weak bear trend. And with our contrarian approach, this has historically been a good entry point. These are fade-the-crowd signals, and they fade fear into opportunity. Now, let's talk about MVRV, the market value to realized value ratio. In plain terms, it compares what the whole network is worth today against the average price every coin last moved at, essentially the market's aggregate cost basis. Right now, MVRV reads 1.14, with a z-score of roughly 0.34. That's squarely in neutral territory, well below the euphoric, overheated readings above 3 or 4 that have historically marked cycle tops, but still above the deep capitulation lows under 1 that mark generational bottoms. In other words, the average holder is only modestly in profit. There's no greed left to flush out, no mania to unwind. We read this as a quiet accumulation signal, score plus 0.36, and another long-term metric leaning gently bullish while the short-term crowd panics. This is where the power law gets interesting. Bitcoin is trading around $60,000 as of this recording, but the model's fair value sits at $138,000. That's a 56% discount to trend. The z-score is roughly -2. Historically, this is a capitulation zone. However, ironically, this is also one of the best accumulation zones, and the model's floor sits right around $58,000.
Now, important note, since our goal is to provide a comprehensive analysis of Bitcoin over time, and due to the high volatility of this asset, our model assigns a higher weight to long-term indicators, around 70%, and the remaining to the short-term ones. This also helps capture the signal over the noise.
So why is Bitcoin bleeding right now, even with the long-term models flashing cheap? The answer is macro. A historic wave of liquidity is being pulled out of crypto and into the equity market. SpaceX is about to launch the largest initial public offering in history, targeting a valuation near $1.75 trillion, with shares listing on the Nasdaq around June 12th. And it's not alone. OpenAI and Anthropic are both lining up to go public later this year. When mega offerings like these hit, investors raise cash to chase them. They trim their existing positions, and the most speculative, easiest to sell assets get sold first. That means crypto and even high-flying tech names. Analysts are calling it exactly that, a crowding out effect, where AI and IPO mania siphons the dry powder straight out of Bitcoin. You can see it in the price action. For years, Bitcoin moved almost in lockstep with the Nasdaq, but in recent weeks, that link has snapped. Tech stocks keep printing record highs while Bitcoin slides. On top of that, there's a geopolitical crisis rattling global markets, and in moments like these, Bitcoin still trades like a high beta risk asset, not the safe haven some hoped for. When fear grips the world and investors rush for the exits, Bitcoin gets sold right alongside stocks. And that fear is screaming on the sentiment gauge. The Fear and Greed Index has collapsed to 12, deep in extreme fear territory. Now remember our contrarian lens. Historically, readings this low have not marked the moment to run. They've marked the moment of maximum pessimism, the zone where long-term accumulators quietly step in while everyone else is heading for the door. So here's the takeaway. Short-term, the market is weak and nervous, and macro liquidity is draining away into IPOs and risk-off fear. But the long-term contrarian signals, power law, MVRV, the moving averages, say Bitcoin is cheap relative to its own growth curve. Buy the fear, not the headline. The general index splits that tension, neutral leaning bullish, not a green light, but far from a reason to panic. This isn't financial advice, it's what the weighted signal implies. Models can be broken, so be wise with any information you receive. You can see these indicators, live charts, and many more on the free dashboard at bitcoinsignalprocessing.com. Also, please share and subscribe if you would like more content like this, and let me know in the comment section what's your take about Bitcoin. Sayonara.